whereby, as we know, in Islam, interest or usury is prohibited and is regarded as a very grave sin from the Islamic perspective, because in the Quran, Allah in many verses condemned those who actually involve in the riba transaction or usury or interest. And this is why in 1960s, 1970s, post-colonial period, many Muslim countries started to think about the alternative for conventional banking, and Islamic banking is one of the alternative to ensure that Muslims are free from riba transactions. And Islamic banking is not just about riba prohibitions, but also it actually a system that fulfill the spirit and the principle of Shariah, in which many other prohibited elements are removed. And these prohibited elements are actually for the betterment of the society as a whole. For example, riba is one of them. The second element is the element of gambling or excessive leveraging and speculative activities, which can cause disaster to the human being. And what we have seen in the past few decades, the system which is based on this excessive speculative aren't very viable, very exposed to a lot of crisis. And this is also one of the elements which is prohibited in Islam. And besides that, the element of uncertainty or ambiguity, whereby, for example, in Islam, everything must be transparent. There cannot be any hidden charges. All charges must be justified by any risk, liability, and effort that put forward by the parties involved in the transaction. In other words, Islam does not condone any form of making money out of nothing or making money out of money. Money which is generated out of Islamic transaction must be attached to the real economic activities, meaning that there must be an asset, there must be a real business activities which is forms the whole transaction. And this is something which is very much part of the characteristics of Islamic banking and finance. As I mentioned, because at the end of the day, we have to understand what would be the objective of the whole transaction. Banking is a financial intermediary. Of course, it is not originated by Islam, and Islam, with regards to financial transaction, business transaction, are very flexible, in the sense that the premise or the legal ruling when it comes to Islamic financial transaction or Islamic business transaction is not as rigid when it comes to ritual like prayer, fasting, performing Hajj, or paying zakah, or compulsory alms. So these are specific ruling which is quite rigid. But when it comes to business dealing, it is all based on the premise which is already established in the Islamic jurisprudence, that everything is permissible under Islam unless there is a clear evidence in the text, like in the Quran or in the Hadith, that prohibits such a transaction. Al-aslu fil ashya ibahah hatta yadulla dali ala tahrimihi. So based on this premise, riba is prohibited because it's clearly mentioned in the text, either in the Quran or in the Hadith of the Prophet. But when it comes to banking, there's no clear evidence that banking is prohibited. Therefore, it started with the premise that banking as a financial intermediary is allowed. But when we look into the financial intermediation process, in conventional, they are charging interest or riba on both sides of the balance sheet. On the liability side, when the depositors deposit their money into the bank, they are actually the lender to the bank. They loan money to the bank, and they are being given a certain percentage of interest, which is deemed as riba. Similarly, the same money will be channeled to asset side of the balance sheet of the bank for various loan purposes, personal loan, car loan, mortgages, and so on, or even businesses. And this is being charged with interest. And therefore, the difference between interest charged on the asset side and different given to the depositors on the liability sides are the spread, which is the source of income to the bank. While this is deemed to be prohibited because it's based on the interest which is deemed as riba, in Islamic banking, they have various other contracts that are available since the Prophet's time. For example, on the liability side, when the depositors deposit their money, they can actually, based on the principle of what is known as custodianship or wadi'ah, which has been practiced during the Prophet's time, where the depositor deposit their assets to be under the custodianship of the bank. And this has been practiced even during the Prophet. Whenever the Prophet's on a journey, he or even his companion will put their assets under the custodianship of another companion who are actually residing in Medina, for example. So the same concept or contract can be applied in the modern day of banking, whereby the relationship between the depositor and the bank can be deemed as a fiduciary relationship with regards to depositor who deposit their money under the principle of custodianship, or is known in Arabic term as wadi'ah. Similarly, when it comes to the asset side, you have various form of economic needs and objectives of the client. For example, if the customer wants to buy a house, in conventional, the common loan product, which is a mortgages, which is based on interest is deemed to be prohibited. But in Islamic transaction, they can use a various form of instrument that are available in Islamic jurisprudence. For example, trading. Because in the Quran, when Allah prohibits riba, He immediately gave an alternative, which Allah mentioned, وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى. When Allah prohibits riba, He gives an alternative, which is trading. In this context, when a bank actually wants to offer this kind of facility to the customer, they can actually buy it from the developer or from the seller of the house, and then they purchase by entering into a contract of sales, and then subsequently they will sell this house to the customer at a markup price, which is actually based on the Islamic principle. This is absolutely acceptable. The profit generated from this transaction is not the same as an interest in a loan contract, whereby loan does not actually relates to any real economic activity. It's just a matter of a person who have money, or a capitalist who have capital can just give capital with a certain rent charged on the capital given. But from the Islamic perspective, this is not acceptable. As I've already indicated to you earlier, money cannot begets money. You cannot make money out of money. Therefore, Islamic transaction use another way by purchasing it, incur some liability and assuming certain risks. For example, if the house goes on defect or cannot be delivered, then as a seller, you have to take responsibility, you have to assume liability, you have to assume risk in the sense of ownership risk. Therefore, you have to compensate the customer. So this is just an example how in Islamic banking they can earn profit by entering into trading activities or sales or even leasing activities or even partnership activities, which is different from the typical loan structure in conventional.
Okay, there is a confusion between what is and what is not Islamic banking. There are some scholars who are critical of the current state of Islamic banking, the way they are operating. They're of the view that it is not truly Islamic.
What are specific issues?
They are saying, like, you know, when you're charging like a different amount when the time frame of the payment is like longer, and like let's say if I buy something.
You mean the cash sales and credit sales?
And credit sales.
In Islam, there is no issue of having different prices with regards to cash or deferred sales, because in Islam the principle laid down by the Quran, Ya ayyuhallazina amanu la ta'kulu amwalakum bainakum bil batil illa an takuna tijaratan an taradin minkum. O people who believe, O Muslims, if you a true believer, do not eat each other's wealth in a wrongful manner, bil batil illa an takuna tijaratan an taradin minkum, except you are entering into a trading, said Allah, in a manner where both parties consent, or it is based on mutual consent. So the principle laid down in any transaction is based on mutual consent. The issue is, when it comes to sales, there is no problem at all. In Islamic jurisprudence, the scholars endorse both cash sales as well as credit sales. In fact, the longest verse in the Quran, Surah Al-Baqarah 282, the whole page is only pertaining to one transaction, which is actually a deferred payment sales or a deferred payment transaction. In this case, Islam recognizes trading whereby the price is going to be on deferred. And when it comes to deferred, of course, there must be element of consideration, among others, time, where the time that you are having a cash sales is different from the time where you actually having a credit sales, in the sense that a seller may not get the price or the money if in the case of credit sales, because they cannot use the money, so there is an opportunity loss. In Islam, time has its shares in terms of coming up with a pricing, as long as both parties agreed that the price that we are going to conclude upfront is of a certain amount. For example, if I were to sell to you a certain commodity for 100 ringgit cash or $100 cash, okay, but I give you an option. If you want to pay me on deferred, then we should conclude the sales based on the little bit higher, which is $110. In Islam, as long as the price is fixed upfront and there is no element of coercion, okay, on both parties, meaning that it is based on mutual consent, then it is absolutely permissible, legitimate sales, and both parties can enter into such a sales without any issues of violation to the Shariah principle. So this is a very fundamental, because in Islam, if it is based on I don't think it's an idealistic, because so far Islamic banking has been very successful. Malaysia, for example, since 1983, the first Islamic bank was established and introduced in Malaysia. It has been very successful until today. You can see that more than 20% of the market shares in banking, for example, are now assumed by Islamic banking. And Islamic banking is not just a theory, it has been widely acceptable and it has been widely practiced, not only among the Muslim countries, but also among the non-Muslims or Western countries. And you can see almost all countries have at least Islamic banking services, if not a full-fledged branch or a full-fledged operation. Like, for example, in Britain, at least there are 5 Islamic banks that have been established, not only to cater the needs of the Muslims, but also nowadays it has an appealing element to the non-Muslims as well, mainly because Islamic banking has proven during the crisis it is more robust. It doesn't actually affect it with the crisis directly, because of course indirectly, because we are living in a global world, whatever happened to the economy will also affect any entity in the economy. But in specific manner, Islamic banking did not suffer a great or huge loss which requires them to be declared bankrupt or winding up, as what happened in US, for example. Because why? Because from the very beginning, the parameter or the principle laid down to safeguard Islamic banking is very clear. Islamic banking cannot even involve in those toxic assets which has become the main issue in US economy or in the US financial system. Islamic banking are not allowed to trade in derivative instrument, CDS, or even cannot trade debt, like in the case of subprime loan, where it has been securitized into collateralized debt obligations, CDOs. From the Islamic perspective, this is not acceptable because of the element of riba, and therefore many Islamic bankings, to a certain extent, they are more secured from and able to weather the financial crisis due to the inherent nature of Islamic banking, which is based on the Shariah principle, which disallow them from entering into any ambiguous transaction which go against the principle of Shariah, such as gambling, such as excessive speculation, such as trading something which is uncertain, trading something which is not owned, trading in currency and forex, which is not based on the real economic activities, which devoid from the principles of equality and principle of justice and fairness based on the Sharia exposition.
Okay, what is the qualifying criteria for a loan at an Islamic bank for a client? Does he have to be Muslim or is it open?
There's no such thing as we finance only Muslims, because in Islam, doing business can be both to the Muslims as well as to the non-Muslims. Even to become a partner, there is no restriction in Sharia for a Muslims to be a partner with a non-Muslim, as long as the underlying transaction is complying to the Islamic principle, meaning that you cannot partnering with the non-Muslims to do activities such as gambling. But there is no harm to be partner with the non-Muslims to do Islamic transaction which is permissible, like entering into trading of permissible food, or entering into manufacturing something which is good to the public needs, like manufacturing product which is needed by the society, as long as the product itself is not contravening to the Sharia principle. So in the case of giving financing in Malaysia, for example, interestingly, 60% of the customer base of Islamic banking are non-Muslims, to show to you that non-Muslims are more subscribing to Islamic banking, partly because first, they can see the ethical and morality dimension in Islamic banking. Second, there are more transparent way of doing things. As I mentioned earlier, there is no hidden charges. Every charges must be explicitly justified by whatever effort taken by the entities. Third, if you look at the pricing of Islamic banking, because it's a trade, it's a fixed amount, regardless of whatever interest movement in the market, it will be secured or it will be fixed throughout the tenor. This actually appeal to many non-Muslims, customers, who feel that for a long-term financing instrument, say 15 years, 20 years financing, a mortgage, for example, it will have more security, it has a peace of mind, because whenever he enter into a transaction with Islamic banking based on trading principles, sales like murabaha, they know that the pricing is fixed. Even if the interest rate goes up, the rate of Islamic banking will still maintain, because it has been fixed upfront based on the selling price, which has to be quoted clearly upfront under the Islamic principle. Unlike conventional interest, where interest rate move depending on the market interest rate. If market interest rate goes up, normally what the conventional bank will do is to adjust the interest rate upward, and this is not something which is acceptable in Islamic banking practices.
Okay, your concluding remarks on Islamic banking.
I think Islamic banking has a brighter future. You can see today, after the whole financial crisis, it actually reflects one important lesson to the humankind, that usually based economy or interest-based economy is not sustainable. It has its inherent fragility, whereby it encourages greed, it invokes a lot of mismanagement, poor governance, poor responsible corporate citizen. So these are the issues which may not happen in Islamic banking, because Shariah requirement or Islamic principle require Islamic bank to be transparent, to have a proper governance which is clearly outlined by the Shariah principle. As I've already indicated, all the transactions must be based on the real economic activities, must be governed by Shariah committee which will look into the matter seriously. In other words, the governance aspects of the whole transaction are having double or triple layers of governance as opposed to conventional banking. And more importantly, Islamic banking are not allowed to enter into any fictitious, any toxic, and any transaction which are deemed to be in violation to the moral, to the principle of humankind, which is based on gambling, excessive speculation, or even based on greed. I